And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report, a daily market show where we break down all the news, the price action, whatever's on our mind, have some fun while we're doing it as well. And we bring it here to you live on YouTube. If you're out there watching the show, welcome as always. And Marky, how are you doing today?
I am actually doing reasonable. Not that you care, but I am doing okay.
I was about to say, check one for the pleasantries.
I do care, Mark. I do care. I'm an empath.
Lying.
Don't you know
You're a lying bear is what you are.
It is what it is. We're going to be talking markets here today. Cody, how are you doing, brother? You're a good Texan. You'll take the pleasantries, right?
Absolutely. I mean, some good Southern hospitality makes everyone's day better.
I agree with that. You know, the old tip of the cap, the wave hello to your neighbor, and
saying howdy as you walk down the street.
Yeah, that's right. I'm like that. In small town Utah, I mean, we waved at every car driving by. You know, when I was a kid.
Funniest thing is like howdy is so just ingrained in me. Like I'll walk here in Hawaii, walking, you know, someone will be aloha, I'll be like howdy. I'm like, aloha.
Yeah. The old
it's
aloha.
Just so, like that's just the hello to me. It's just howdy.
Sure. Mark, what's a better hello, aloha or howdy?
Listen, you got to be country to use howdy. Like if you use howdy and you aren't country, you're not going to pull it off.
That's the other thing. Is if you're over enunciating the W, you're not. You should be. It's not howdy.
It's howdy.
And there's my man Steven representing right now. Howdy from the halftime crew. Steven is a Texan though. He is
like
country.
If you're country, you can pull howdy off. But if you're not, if you're a city slicker, don't even try. It's not going to end up well with you.
Yeah. All right, let's talk markets here. Let's start with the S&P 500. Break down the technicals. We're getting a little bit of a bounce back day, obviously a little back and forth volatility in the last couple weeks. Bulls have been in charge of this market. We've been talking about that day by day in the short term, but there's several obvious concerns I have from a reward to risk standpoint. I've been labeled Timmy the Bear for a reason. We'll get down to that. But let's start with the technicals here, Cody. Just tell me what you're seeing just from a chart perspective.
I'm seeing exactly what we called last week play out when we pointed out that it had a slight retracement with the break above the 20, and it had that moving average pocket that could be filled. And we're seeing that moving average pocket get filled. Now we're getting right up into that resistance level. So whether or not it continues higher than in the, to finish out the week really just depends if it can get through that. If it doesn't get through that, it's most likely going to retrace back down to the previous level. Hopefully it doesn't necessarily drop off, but I mean, it could when you look at the different scenarios. If it were to break this trend line here, I mean, it could definitely start dropping, going all the way back to those lows. But what it could do is simply retrace back to that 2,600 that it broke through last week. Or it could possibly, if it gets through that 50, it'll hit its head right there on the 200. Mm-hmm. So we're in one of those resistance zones right now. So it's not necessarily a hard number as it is a zone, because it has to get both above the 50, above the 200. So if it does move up, which, I mean, you can take the Timmy the Bear here in a second. If it does move up, I actually expect it to probably consolidate for a little while. I don't see anything that's going to really make this, that V-shaped recovery that some people have been talking about. I see this as, really hitting its head, really struggling to get past that before we can even think that it might continue. And if it does start getting above that, I don't see this amount of movement and this volatility continuing. I mean, look at the size of these candles that it moved up to its all-time highs versus these candles. I don't see these volatile big move candles, these huge percentages, 2.4% in a day, continuing through the next month. I think we'll start getting to the point where we're back down at 0.2%, 0.5% down, up 0.1, just starting to battle and really get back to normality. But that's not going to happen until all this craziness in the news finishes up. So the technicals are there, but I expect more slowing momentum in the coming future.
Yeah. Give me the VIX, if you will. Actually, I think it's a really good point. Market volatility has been at an all-time high in the last month and a half, Mark. Obviously, the VIX is now coming back. Where are we at on the VIX? 38. First time we've been less than 40 here in, I guess, almost a month, I would say. Mark, do you expect volatility to temper as we're heading through earnings season? Do you think that the longer we go here, we're going to eventually see a VIX down near 20 again? I mean, what's your expectation from a day-by-day standpoint in terms of these markets?
Well, how manipulated are the markets would be the correct answer to the thing, because if the markets are ultra manipulated from this point on, then you could see the VIX fall lower. The plain and simple fact, IMF came out today, said the coronavirus, the International Monetary Fund, could cost the global economy $9 trillion in lost GDP over the next 2 years. Like, right now, we're in this little fantasy world of not worrying about the future, not worrying about numbers, not worrying about anything, that everything's just going to be okay. Algos have been in control for the last couple of weeks, strong on the bullish side for the last few weeks. So that's all wonderful as long as that continues. There's real hard data coming down the line that is going to shake people. For the bulls to win this long term, they have to have the ability to endlessly shake off bad economic data, to endlessly shake off bad earnings, time and time and time and time and time again. They have to hope that the coronavirus, which the market is totally discounting once again, like completely discounting the impact that the coronavirus will have, the deadliness, the seriousness of the virus itself. Market's completely.
Doesn't that happen with any big news event, though? I mean, think about Brexit or the trade war or government shutdown. It's like the market reacts to these things, but as they exist in the news world longer, the market starts to care less and less, no matter how big of an actual story it is. Doesn't that always happen? It just tapers off where the market is just like, meh, who cares?
Yeah, VIX spikes are there for a reason. I mean, in that reflection, Cody, I would agree with that. In the history of markets, they tend to overreact in the short term, then they can tend to start not worrying about it so much, right?
But here's the thing: is like, so right now the debate, yes, and that is absolutely true with market behavior. I remember I was walking into a room and I'd been out busy about, and somebody says, you know, because this is when Brexit was causing the market to tank severely for a couple of days.
Mm-hmm.
And they're like, oh, sell, the market's crashed. And I just looked at it and I was like caught up on the headlines. I was like, oh, screw this. This doesn't mean anything. Like the one thing that has been different about me on the virus than other things is because I'm a traditional, that doesn't mean anything buy. Even when the virus came out in 2015, Ebola, you know, I looked at the data and I was like, oh, this is a buying opportunity. This doesn't matter. When Brexit, this buying opportunity, this doesn't matter. When all of these things happen, the virus is different than these other news stories that we've experienced over the last 11, 12 years that have caused big market sell-offs. The virus will come up at some point and say, hey, look at me. I'm still around. I'm still killing people. I'm still disrupting economy. I'm still changing consumer behavior. The only way the virus doesn't is if we have magically developed herd immunity at this massive level already. And
Did
that
y'all
is
see the news out of Johnson & Johnson, which is one of the reasons I think that they had such a move today. They estimate that if their trial they're currently working on goes through, that they can be able to produce.
Let's go to Johnson & Johnson, because I think Johnson & Johnson is a good example if you want to play this market. You know why? You know, it's not the trial that sent Johnson & Johnson up.
Mm-hmm.
You know why Johnson & Johnson's been on a roll? Because Johnson & Johnson's actually making money.
And they increased their dividend 6%.
So, I mean, this is the thing moving forward. Their EPS numbers were higher this quarter than they were a year ago. They increased their dividend. Johnson & Johnson, and you're going to see this in certain healthcare companies, you're going to see this in certain segments of the society, where they're actually making money. Their business, who they are, is actually not just operating at a high level compared to where it was. It forward-looking can say logically, this company, in the midst of all of this chaos, this company is actually making money, not just making money, but growing their profits,
Absolutely.
Increasing their dividends. The company is healthy. There are going to be companies that we start to get information on that you can say, all right, it's logical. In the face of no matter what the future looks like with the coronavirus, so coronavirus can this, no consumer behaviors, there are going to be some companies that you can get back to and say, all right, I'm a lot more confident in this company that no matter what the future holds,
Absolutely. I've been a fan of Johnson & Johnson for a long time. Even when they were getting hit with the asbestos hits and things like that, I was like, no, there's going to be a buying opportunity in this company, because I love how diverse the company is as well. It's got some consumer staples in it. It's got some pharmaceuticals in it. It's got healthcare in it. It is a very diverse company in and of itself.
And it does
Well,
actually pay a dividend. I mean, I think
yeah,
for a
and
lot
a
of people
big dividend
chasing
too.
safety right now, Mark, the idea of a company that's increasing dividend, actually making money, and came out with a report on their earnings today that they've got good things in front of it. And by the way, Cody, if they do get that vaccine track, which is still a ways away, but that would be very positive news, not only
that
for
would be
society,
huge.
but it would be great for the company as well, which is what capitalism is all about. Companies actually solving problems and making money instead of just taking handouts.
And so, like, if you get a market sell-off, I mean, because here's the thing, like, and this is the thing that, you know, I'll do for my classes for our pro community, and we'll just give everybody this little tidbit on Johnson & Johnson. When we have, because remember, this is a long production, this whole coronavirus situation. We're going to be dealing with this with months and months and months, the economic fallout, this long play that we're going to be watching. Johnson & Johnson now becomes a candidate that when we have some of those deeper sell-offs, we can look and prioritize Johnson & Johnson in the building of an investing portfolio. When we have trade setups, we can look at Johnson & Johnson as a high quality trading candidate when we get certain technical setups occur. So moving forward, there's going to be these baskets of companies that, at least in my opinion, y'all can do whatever you want, that I look at and be like, this is a better play. Big sell-offs. When big sell-offs occur, where do I really want to gravitate towards on healthy companies? I'm going to have a healthy company box. Now, there's other things I'm going to do on distressed companies that are really at depreciated price levels. Continue to do that. But in so many ways, once we get a snapshot of where a company is, we can be a lot more traditionally focused on that company. And I think Johnson & Johnson absolutely fits that mold from this point moving forward. That those pullbacks, because when the market sells off, especially in extreme, everything sells off: silver, gold, REITs, Johnson & Johnson, everything. Like, pivoting more aggressively towards this basket of candidates for those position trades, for those swing trades, and in particularly your long-term investments. It's going to be nice to have this basket of stocks, and Johnson & Johnson's on that list.
Back on the market here for a minute, and I do love the J&J topic, and we're going to talk about bank earnings and all different companies today. And by the way, we're going to play a little game of rapid fire at the end of the show, so get your popcorn ready, get your stocks ready. We're going to run through some different charts for you guys out there, our audience. If you're watching this show for the first time, we do it every day, 12:30 Eastern, for about an hour, or actually longer lately, Cody. We've been long-winded. The markets have been something that there's no doubt.
About an hour and a half every day, an hour.
Hey, I don't mind. Dude, I could do this show for 4 hours, quite frankly, but we've got other things to do. I get it. But actually, we've launched a recent series here, Mark, on Wednesday nights that will continue tomorrow. And it's been our feature of the week, where we actually have a deep dive on a different topic. 2 weeks ago, Noah Davidson did some on swing trading. Last week, Coach Tyler Craig did some on bear market trading and hedging. And we're going to have another event tomorrow night. More on that information tomorrow. If you've not subscribed to our channel yet, click the button, click the subscribe, click the bell, come back and join us every day. Let's talk a little bit about.
Add to that, I would also say, guys, get in the lounge too. This morning I sat in and Gino did a fantastic lounge going through contingent orders into options based off stock movements and how to hedge them and get out and stay safe. It was a beautiful lounge. So definitely enjoy all the things we put out there. We have these special shows that Tim was just talking about. We have the daily lounge to help out our traders. If you're not a pro member, you're missing out.
Yeah.
If you're a pro member and you're not going to these shows, why not?
Oh, I love the lounge. One of our most popular products. Closures here, guys. I want to talk about broad markets, because one of the themes that is coming up obviously over and over and over again in the news right now is, when are we going to reopen the economy? You're starting to get chatter from certain segments in different states, different counties. They want to reopen as soon as possible. Early May is kind of what they're targeting. I did read in India, they pushed it out to, middle of May, I believe. In Europe, you saw some closures extended into early May as well. You had a little Twitter feud there between Trump and Cuomo today and yesterday about whether or not New York is in charge of its reopening or whether or not Trump is. I don't want to get into the politics of it, quite frankly. I'm going to leave that for another show. But does the market price in right now that the economy should be reopening at least small in different ways by May, Mark? Is that what everybody's assuming?
Well, the thing about it is you're going to get a headline bump whenever you have talk of the economy reopening, the market's going to be like, yeah, let's do this, and it's going to be a headline bullish thing. That's not the big question. I mean, it will create a bump, right? Like, that's just the easiest thing to predict in the whole world. There's a lot of way reopening the economy can play out, right? I mean, it can be a slow, gradual, rolling process. The idea of I think a lot of bulls in some ways have been said, well, there's going to be this magical date that things will just reopen. I mean, it's really hard to see how that practically.
There is not a magic date. This is going to be a process slowly over time that incrementally certain businesses reopen. Even then, like, there are some business owners that are probably going to be like, I'm going to stay closed for a little bit longer. Have the private sector choose not to reopen fully or start, opening their dining rooms or different things and just
consider a restaurant, Cody.
Yeah,
I mean, if you can't project demand, are you just going to open up the doors right away, stock your entire freezer with food, and bring the staff on full time? I think that would be foolhardy.
Maybe open half the dining room, or even move some tables around and actually social distance some tables, and still have maybe a limit of how many people can come in. Like, I don't see any stark, on this date the economy is reopened. I don't see it. It's not only that, but it's not a federal government thing. It's state level, local level, and then private businesses. There's such a tier of who actually gets to decide when it's reopened that even if certain people start to reopen in certain areas, the entire economy is not opening up in a single day or even a single week. This is going to take months to reopen this thing.
And I guess the important question I have for you, Mark, and really what I'm curious about it, based on what your perception is does the market care when this thing reopens? Is it pricing some kind of anticipation of the economy on rolling out again?
First of all, the most of this is algo driven, this price action over the last week. But it's also being slightly fueled by this general bullish optimism that things will be better one day. The broad, like how it opens, like, will there be a headline bump when things start reopening? Yeah, because all headlines create a bump one way or another. It's just, and then they get absorbed into the existing short-term trend really quickly. But the whole real bullish argument isn't about that it opens up on May 1st or May 15th or June 1st. It's that things are going to be good one day, 2021, 2022. Things are going to get back to normal. And there's this increasing, like, I don't care what the numbers are today. I'm buying and holding because the stock market's always the place to be. And so that's just the general attitude. So whatever the specifics are moving forward, it's not going to dissuade individuals that are in this camp right now. Something else has to dissuade them. And I mean, something else has to happen for individuals to say, oh, maybe I shouldn't own stock. I mean, you could see S&P up to 32 freaking hundred in the coming weeks if algos and nothing bad happens. I mean, I mean, short-term price action is not an indicative force on how this plays out long-term. You just have.
I think that's an important point. Say that again, because I think that's a really important point. Whether the market goes up or down in the short term, I'm talking about through all of earnings, April and May, is not indicative of the long-term outcome of this whole thing. It just
it just isn't. Like, this is a long production. And once again, I side, and once again, I'm on the bullish camp. You bulls out there, I'm with you. But like, how I'm approaching this is from a strategic, acknowledging some of the economic realities. Market prices might be up. There's going to be a lot of Americans hurting. There's going to be a lot of economic damage. There's no way around that. And so realizing that there's downside risk, realizing that uber bulls might just be delusional right now, living in a fantasy land that, the new bullish Disney world, like, it's about how do you approach it? How much upside do you have from this point? Like if you,
Well, let's ask the audience. Let's poll, do a random poll here, guys. Out there, Team Tackle. If, let's say whether you are bullish, bearish, or neutral on the sidelines, doesn't matter what your personal opinion is. What is the upside for the market if the bulls keep winning? What do you think can be the outcome this year? Do you think the S&P target we're at 2,800 right now, 3,000, 3,200, 3,400 higher? What is the best outcome for the bulls logistically from your opinion? I'd be very curious to hear what people have to say. And there's always a lag here, Mark, so you can continue your thought.
And while those thoughts, and so, I mean, this is the question that I ask myself on my own personal investing choices. I'm like, what percentage return? And I'm not talking about trading, day trading. That's all a separate thing in which we can do. But as far as those long-term holdings, what is the percentage return that I could look to potentially get if I were to buy in today? That's an exercise I've been doing every day for a little while now. And I'm like, all right, so I have X amount of upside potential. And I'm like, what is it? 10%, 12%, 14%, is it 27%? I mean, that's the number. And then I be like, all right, so if I were to take the same approach with naked puts and sell those naked puts consistently at lower levels, absorbing some of that downside risk, right? Because I'm not going to get put the shares unless price falls to that level. What percentage return would I get on that naked put over the course of the rest of the year? And like, if you think there's 12% upside on a stock and you can get 14% upside on selling naked puts constantly at lower levels, that seems to me to be the no-brainer approach on how a bull. Now, if you're a bear, you're like, screw y'all, you're idiots for even talking about this. But from a bullish point of view, the camp I fall in, you're absorbing some of the downside risk while still getting percentage gains at a level that you might get from just buying outright today. And so like that naked put approach to this market just seems to me to be the, why wouldn't you attack
you
it?
could make the same argument in any system, though. You would expect to make more than 12% on your capital day trading every day for the rest of the year, right? I mean, with the market volatility, you would expect to make more than 12% of your capital swing trading once the swings come back, right?
Yeah, but I'm talking from an investing point of view, because let's be honest, 99% of America are investors. They're not swing traders. They're not day traders. They don't have that skill set. They don't wish to acquire that skill set. You know, it's just from that investing point of view is that, hey, if I'm going to buy and hold today, how much upside percentages? Why you wouldn't, from a bullish perspective, sell naked puts instead to make comparable, maybe a little less, overall returns, while not taking any of that down, well, not any, but not taking the same level of the downside risk. It just seems to me, especially in this environment where this very well could be a technical algo run up, a hope run up.
I'm with you. I'm with you 100%. But here's the thing. These tactics investors all need to learn, right? Naked puts, okay? Covered calls, long equity. There will be a time to go long equity, Mark.
And I talked about this weekend. Like, there are time periods. 2017 comes to mind. The breakout that occurred. I remember being on one of our coaches meeting and be like, hell, even I might go long equity here. You know, and somebody made the joke, was like, well, shoot, we all should just like push the chips in. Like, there are times that the market conditions, 2017, we had global synchronized growth. The bears always make their arguments, but sometimes the arguments are these theoretical, yeah, well, that's nice. Yes. You know, asteroid might hit the earth too. Should I go short because of that?
The sun is going to die one day. I get it.
I mean, yeah.
But that's the history of bears. That's not today's bears.
Yeah,
today's bears arguments are mathematical.
You know, but like, there are times where just going long seems like the really smart decision to do, because your upside potential is just high. The risk is minimal. My gosh, like some of the things I see bulls do today, I'm like, you are essentially betting. Let's take Disney, for example. Let's go to Disney. And I see this more and more where they're essentially saying, I don't care how much money Disney loses this year. I don't care how much cash they burn. I don't care. Disney one day in 20, they're essentially saying price is cheap today. Fundamentals don't matter. Disney is awesome. And one day they'll be great. Well, that better be your time horizon. And when I use the word time horizon, if you think Disney, and once again, do I agree with you on Disney one day? Absolutely, 100%. We're going to beat the coronavirus. But what's the price level that I'm willing to own at forever? That's a much different conversation. But you see a lot of bulls just say, hey, one day it will be good. One day it will be good. And so I'm willing. Well, if that's the case.
But I haven't decided I want to own Disney forever. See, until I know what social behavior looks like after this thing, how could you decide you want to own a company that's dependent on humans going into close proximity?
That's a reasonable thing, because Disney is not Johnson and Johnson.
I mean, J&J was an easy call. I mean, they're solving a medical problem. They're working on virus vaccinations. They're working on all kinds of things. They're raising their dividend. That's a completely different fundamental outlook than I've always loved Disney. I love the Avengers. Bob Iger is going to save the world. Let's all go buy Disney just because we love Mickey Mouse. No.
All stocks are not created equal in this environment. Johnson and Johnson, no matter how long the virus, we got a snapshot of how they're doing. So maybe they get extra, maybe they're the vaccine winner, right? Mm-hmm. Maybe they're not, who knows? That's just a bonus to me. On the ground, fundamental numbers on Johnson and Johnson, the fact that they raised their dividend a healthy percentage, what was it? 6.3%.
Yeah. They were at 95 cents. They went up to $1.05, I think. Which is a significant thing in a world where there's uncertainty. A company that's been a dividend payer, consumer staple, medicine provider, who's working on solutions to the problem we're currently facing, also raising their dividend. Sign me up for a high five and a great news story for a company today. Disney hopes. I mean,
now realize that because J&J is a major component in major indices, that if the market sells off as a whole, there's short-term price risk on Johnson and Johnson, right? There's short-term. I mean, once again, we saw this in price action during the sell-off in February, March. Mm-hmm. Everything gets struck down. Sure. It's top-down analysis. We know this. On those dips, on those sell-offs, Johnson & Johnson becomes a very attractive candidate because you can get a semblance of what their future looks. Doesn't matter if IMF is right, and hold on one second. No, Pook, take that up. My daughter just is like, she's doing a good job. She has my phone. She's playing games on it, and she gets a phone call, and somebody is calling the customer service line right now to tackle trading. And if you're doing that, I'll get with you shortly thereafter. But you get a snapshot. So if IMF is right, okay, so let's absorb the bearish argument and say, yes, IMF is correct. $9 trillion are going to be cut off global GDP in the next 2 years. Mm-hmm. $9 trillion. Some companies, not all companies are created equal. And Johnson & Johnson, we get a snapshot of how they absorb that. Some companies are going to get decimated if that's true. There's no way around. If global GDP loses $9 trillion in the next 2 years, there's some companies that aren't going to fare very well. Mm-hmm. So if you want to make a blind bet on companies that are front and center in this at high elevated prices, hey, you got more faith than me. But with Johnson & Johnson on those sell-offs when they occur, I mean, go look at naked put levels. Like finding levels that you're willing to own Johnson & Johnson at, it becomes a lot more potentially attractive.
Sorry, I was working on butterflies this morning.
No, becomes a lot more potentially attractive in ways to generate cash. So Johnson, I mean, it's just where you place your money right now tells me a lot of who you are as an investor. or who you are as a risk taker,
Mhm.
or to be blunt, who you are as a degenerate gambler. And if you are,
have a nice little return there on Johnson Johnson if you want to pick it up at a cheaper price.
you know, and
I'll
so
get paid
like,
to pick up Johnson Johnson.
and so this is the navigation. Some individuals, and we will do our best to teach day trading, swing trading, help people navigate this market that's going to be lasting all year long into 2021. But how you navigate that long-term investing portion tells me a lot about who you are. Are you thoughtful, considerate, conservative, or are you this risk taker? Because a risk taker can get better returns on a Disney. If you're betting that everything's going to be fine, and risk takers that are blindly betting on an unknown future.
Risk takers always have periods of short-term burst of where they feel like rock stars, right? The market is very deceptive that way.
Long-term, I mean, risk takers are always going to have these months where the conservative investor says, oh, I wish I was a risk taker right now.
Mm-hmm.
But risk takers also have those stretches where, yeah. And so high risk, high reward, right? That's what they're saying at Disney. I'm buying it at 105. It's going to be back up on 140 before you know it. I mean, you're betting on an unknown future. You're betting on consumer behavior. You're betting on epidemiology. Your knowledge of epidemiology that this virus isn't serious. And once again, like, frontline workers on this virus have my utmost respect. The more we learn about the virus, it is so deadly in close.
Well, and that includes grocery store workers, factory workers, people working in Amazon, people packing meat in South Dakota. So much. Here's one beautiful thing that has happened. It has reminded the real world how much we value these important jobs in the economy. You know, truck drivers, all of that kind of stuff. I'm 100% with you. I mean, that story yesterday about the meat packing plant I just had, it just made me sad, Mark, you know, because we grew up with butchers as uncles that might have worked at a meat packing plant had they not had their own shop in a small town. You know, it's a reality. I'm sure.
No,
guys,
I mean, the thing about it, I remember, you weren't around, or maybe you were just a baby at the time. I remember as a 8, 9, 10-year-old going into the meat processing and seeing the animals butchered and how the whole, how the sausage is made. You know, it's it's a graphic picture, right?
It sure is.
But I mean, and here is my it's, hey, idiots, it's not just the flu message of the day. And I don't know if you saw this headline, Cody, and Tim, but 50 school employees, including a couple dozen teachers, have died in New York City due to the coronavirus. Over the last little stretch.
The situation in New York is disturbing. It's sad. People don't really even want to wrap their head around it. It's so disturbing, right? And that's where the epicenter, by the way, globally now is of the pandemic. You know, it's not in Wuhan, it's not in Italy, it's in New York City right now. And so my heart's out to them too.
Individuals out there now, how should we attack it as a society? How should we reopen? Should we take the risk associated? That's a whole different discussion. And I have my beliefs, but that's not what I'm saying here. It's from a market perspective. I think it is really critical in your investing decision to realize that the virus is not a joke. It's not a worse version of the flu. It's not a worse version of a cold. There is something about the virus. 50 school employees don't die over a few week period because of the flu. If you are in the flu, like, this is just ridiculous, then you are ignorant, you are naive, and you are part of the problem. I don't know the extent of how dangerous this virus is, but I'm not dumb enough to recognize that 50 school employees in New York City don't die in a couple week period because of the flu. That's nonsensical and insane. So you have to recognize from an investment point of view that this virus has the ability to cripple a society, to change consumer behavior. Once again, I'm in the full camp. I believe we eventually need this.
That really gets down to the first two stocks we're talking about here. And I do want to talk about a bunch of other companies. That's the difference in the analysis between Disney and Johnson & Johnson. Even if you do have continued viral outbreaks and a reopening of the economy, but a second wave, some of the scenarios that I think virologists and epidemiologists have been talking about, J&J can still do well in that environment, right? because they're going to be producing medicine. They're the kind of company. So you have fundamental backdrop from a company like this. Disney, you don't. What about the banks? We buried the lead here, Mark.
We
JP
did bury the
Morgan.
lead today.
You know, Cody, bring up JP Morgan if you can. JP Morgan, Wells Fargo, and we're going to get down to, I see a lot of questions coming in the chat. I'm loving it here today, guys. As always, welcome out to our show. We have a lot of fun with this on a daily basis.
Hey, let's talk banks, and then let's do questions the rest of the show.
Well, and I got a bunch of companies I want to get to. Amazon, Roku,
Well, let's
power through them, and then we'll do Q&A, and then we'll do some rapid fire. JP Morgan, Mark, reported earnings, and they were not good bank earnings. If you look at a heat map today, the whole market is green, and there's this little tiny pocket over here for the finance, which is red. JP Morgan, Bank of America, Citigroup, Wells Fargo, all under pressure. What's your read on that bank earnings,
Well,
Mark? I know you just
I love
dug
that.
into it.
This is the insanity of the market right now. The one area that we get a snapshot of what earnings are in a negative way is red, but everything else is green.
The one area of the market we got data on today to help us understand how their business is running actually is down, and the rest of the market's like,
and the rest of the market's green because it's the insanity of the market right now. Hey, listen, I don't root against you bulls. I don't, but the blind bet bulls right now, listen, you and I are not going to get along at the neighborhood barbecue when we start having those again. You know, we're just not going to get along. The bank earnings, and I have been leaning bullish on banks, and I've been cautious. On the Friday before the bell closed, I wanted to sell a naked put on Bank of America, and the community basically voted me down. I don't know if I told you this. They basically voted me down. I was like, oh, fine then. I'll just do it on gold and silver and another little one on oil, you know. Because
voted you down because of earnings coming right up.
And I know, right? So listen, that's the power of community, right?
It's a gamble before earnings versus a thought through trade.
But it's a very subtle thing, but I think it actually explains Mark's perspective a lot here, Cody. And there's a learning moment here. Mark is willing to sell a naked put before earnings because everything he's mapped out in his game theory, based on the way he would approach that investment, a gap down on earnings doesn't affect it. Mark does it.
He would just take ownership and keep playing it. He'd boomerang the trade is what he'd do.
Now, I don't trade naked puts before earnings. I would vote that.
And I never have before either.
Yeah.
But how I'm approaching this market, because this is a unique market, like never before. Bad earnings could get shrugged off. Now, the bank earnings, when you get back down to it, just let me look at a little bit of things. They weren't good, to say the least. In fact, I was surprised because lockdown started happening in March. I didn't think it was surprisingly bad. Wells Fargo made an EPS of 1 cent versus $1.20 a year ago. Now, some of this is write-downs against bad loans that they think are coming up.
Wells Fargo or JPM or Cody, because Bank of America doesn't report till tomorrow. So when you get I think he's tending to his son, by the way. He's got morning duty as a new father.
I'm multitasking over here.
Dude, here's the thing. The audience, we don't mind if you got to be the father. That's more important. But at least once a show, if you're playing babysitter, we want to see that baby at some point.
All right, that's eating. I'll bring him up
at the end of the show. Absolutely. Wells Fargo, Mark, you were talking about. Go ahead.
Well, they made EPS of 1 cent versus $1.20 a year ago. I mean, and this is not. Remember, things were great in January. People were generally euphoric at the first part of February. Locks down, and real fear didn't start hitting towards the end of February. 1 cent versus $1.20 a year ago. And also they paint a picture when you look through the earnings reports. It's not good, right? It's not good.
Very concerning. Very concerning. And by the way, I think the more concerning report was probably JP Morgan, but Wells Fargo had its losses, or not missed expectations, let's say. Wells Fargo talked about drawing down on some different things, but Mark, JP Morgan, I mean, they missed their earnings by $1.10. They added $6.8 billion to loan loss provisions. Jamie Dimon basically said that we're going to be facing one of the worst recessions we ever have. We're liquid. We feel like we're fine in a strong position, but they're expecting to lose more and more on these loan loss provisions. See, these aren't just mortgages that take money out from JP Morgan. When restaurants get some kind of commercial loan or lease or whatever it is. In fact, we saw this from Tesla today. Tesla called their landlord and said, we are not paying you the rent. They sent a letter. We are not paying the rent that we expected to pay. Who's going to take the hit on that besides the bank, Mark? Eventually, when you have defaults and loans not working and they don't happen, this is what banking does, right? So I was concerned about this, quite frankly, quite a bit concerned reading these earnings reports.
Listen, and they paint a dire picture for. They paint a dire picture for what is to come on a real life Main Street level.
Mm-hmm.
And this is the insanity and the detachment of the market right now. Is the market is saying, hey, one day things are going to be great and it's all good. Hard real life number. And once again, I agree with you one day. I'm in your camp, Bulls. It's all a matter of how you play the market. It's all a matter of the risk you're willing to take on. It's all a matter of the discount you are insisting on receiving. And too many Bulls today, in the face of, like, Tim, it's insanity. In a day where the bank's earnings did what they did, where the credit situation is being tightened to your average American, whether it's a home loaner or, insisting on increasing credit, in a day where the IMF forecast that $9 trillion would be eliminated from global GDP, the market is rallying huge. The disconnect, it's almost like the worse the news, the more the Bulls are resolved.
Now, they're resilient. Let's just go through a couple of data points here, Mark. I love the IMF data. We've seen all that. But look at the market again here, Cody, real quick on the SPY. And by the way, welcome out, everybody. If you're watching us right now, it's always good to see you. I did see a bunch of questions come in. I don't want to miss any. Cody, if you can keep an eye on the chat, that would be very, very appreciated. Make sure we don't miss anything. If you're new to our channel, you can just type in brand new, welcome out. We'd love to have beginners here. If you're a veteran of our channel, hashtag Team Tackle and represent out there, guys. Let the beginners know who we are here at Tackle Trading as a community. Number one here, Mark, the market and the bulls have complete resolve, V-shaped rally. But Cody, give me Goldman Sachs. One of the dumbest things I have read in a very long time came out of Goldman Sachs last night or this morning. Whenever they published it, I read it this morning. And Mark, essentially the analyst there at Goldman Sachs was saying, well, you can't really price the current price of the market based on current fundamentals. So we're going to take the 2021 expected earnings from companies based on the relative price of the market right now. So what are we doing now? A 24-month forward PE ratio? By the way, and companies have not adjusted 2021 earnings expectations yet. So we are at an extremely overvalued level at this level right here based on PE in 2020.
On some metrics, you are, it's funny. And this is why the stupid message board bulls just literally infuriate me, because they're saying price is cheap, buy. On many valuation metrics, stocks in the history of the market have never been more expensive than they are today. Mm-hmm. And to buy at valuation levels in the face of everything we know about the coronavirus, the Rona, as it is being called, and everything we know about the economic damage, to be like, I'm willing to buy at the highest price levels ever. It is a detachment from reality that the textbooks will write about one day. Mm-hmm. Like it is just absolute insanity. And once again, I hate that I have to preface every negative statement I say that I'm in the bullish camp. I just think there is if you're looking for overall returns, naked puts at lower levels. If you're looking for that big, huge potential home run, being patient and betting on a pullback without taking the financial risk. There are so many more strategic ways to play it. And these are the type of things that we do at Tackle Trading. We have our live free show here, but we have hours and hours and hours and hours of more detailed, concrete game planning. strategy techniques. It is a great time to come be a member at Team Tackle. Email me at Team at Tackle Trading. I'll get you. I'll get you set up with a trial, or you can go to the store page on Tackle Trading. Come be part of our community, even if it's a trial basis, just to check us out.
I love it. Company news I want to get down to, and we'll do a thorough kind of review of where we're at here at the end as well. Give me Jets, Jets. And here's the thing, guys. I mean, it seems like a deal is going to get done between the airline industry, and there was some provisions being made for them and some back and forth in that negotiation. Looks like some of the loans are going to be forgivable, Mark. We already knew that. And it looks like a lot of the smaller firms have no expectation of giving up equity, but the government also is going to get some equity in these companies. Some of the airlines are now going to be government owned in a partial way. I think United, American, Delta, some of the big ones, anywhere between 1% and 3% of their stock is going to be picked up. And I think we might have lost Cody's screen there shortly. Cody, you back?
Yeah, I popped off for a second. Had to skip in the internet. There we go.
Oh, no problem.
Back on.
Yep. And bring up Jets here, real quick. Mark, in the face of, now this is a different deal than Disney. Okay. Obviously we're talking airlines. Do you think the airlines at deeply lower levels at some point you would be willing to target?
Yes.
Okay. Let's go through a couple. The big ones. Delta. Give me DAL, Cody. I flew Delta. I've literally flown Delta so much in my life doing business trips and whatnot. Where at Delta would you personally target? Like we're at $25 now.
Well, it's so complex because in like 25 seconds, I can't, like, it's a very complex approach I'm taking to airlines and these super distressed things. They have to be at deep discounts. And I'm talking like $10, $5, like really deep discounts. Or they have to be at levels that I'm willing to add some trading risk if I get a bullish signal to place a trade on them with the investing them long term, willing to own at that price level as a backdrop. It is a buy the dip, sell the rip strategy that I haven't been able to implement very much over the last 7 trading sessions because the market's just been rallying. But eventually that dip will come, right? Eventually that dip will come. Or eventually all of those puts will just expire worthless. So I don't know how you aren't, if you are willing to gamble a little bit on an overall bullish theory, looking for that big home run one day. Because, hey, if everything's going to be great one day, if everything's going to be good one day, well, things that are at a deep discount seem attractive to me.
Mm-hmm.
But I'm not going to ignore the fact that nobody's freaking flying right now. And
market's buying up. But here's the thing, the market's buying up tech. They're not buying up airlines. Why not? I thought a couple of weeks ago when that whole news popped, it was all about this recovery, unlimited money, all this kind of stuff. Shouldn't the airlines have benefited from a rally here recently in stock prices?
If you buy the overall theory that earnings one day are going to be good, that 2022 is going to bring better days, that this coronavirus is just going to go away, right? It would make sense that that occurred, right? But there's this, it's like they believe, but they don't believe, right? Is they believe that market prices will be higher, but they're really hesitant in some areas that they can like conceptually think about it.
Mm-hmm.
But you would think, right? If everything's going to be good, right, Dave, just buy everything right now.
Sure.
There's so many disconnects.
You know, Mark, I want to ask you a question that we had in the chat based on that. You know, based on that theory, someone asked, you know, what if it's just a bull trap? What are your thoughts on that? That, you know, things might be better eventually, but what if this movement we're seeing right now is a bull trap?
Hold my beer, my turn. Okay, this is absolutely a bull trap.
Give me the bear.
This is undoubtedly the number one bull trap I have ever seen in my 15-year career as a trader and investor. It is absolutely a bull trap. So that's my perspective. That's my opinion. I'm much more Timmy the Bear than you guys are.
Well, and the chat, as from the bullish, you know, the world isn't going to end side of the debate. The chances of it being a bull trap are high enough that I'm not going in and buying. Like everything I talk about right now deals with naked puts, you know, on things, because like buying right now, and even the selling of naked puts, I'm hesitant to do on a large scale because of the chances of this being a bull trap.
Mhm.
It's too technical. It's too orderly. It's too systematic. Like, this is just like, if you would have just looked at a chart right now, you would think nothing in the whole world's going on, right? That this is just a nice, orderly, bullish rally, that's going on over the last 5, 6, 7 trading sessions. It's too orderly. It's too quiet. It's just way too quiet. And yeah, it smells fishy.
Well, the volume's down. I mean, even traditional technical signals that you could point to: high volume on a sell-off, low volume on the rally, volatility.
Look at yesterday's volume.
We're heading back into some levels that are very concerning from a fib level perspective, from a historical perspective, and quite frankly, today's earnings were not encouraging to me, and we are just getting started with earnings season.
I mean, you look at yesterday's volume, and yesterday's volume was the lowest since all of the craziness started.
Yep.
You know?
Sorry, Mark. I'm not keeping up on the chat here. I got to take a look at it. Chris Knock, how do you feel about straddle trades before earnings? Hey, that's a Coach Matt deal. He loves those volatility builds. We've done some videos in our archive on it. We like him in normal markets. It's kind of not the market for that.
Yeah. I mean, here's the thing.
You're paying high premium on the straddles.
Okay, this is why I hate straddles today.
Yeah.
I hate straddle because, one, you're paying higher premiums, less than you were a few weeks ago, but still paying that. I like straddles on a low vol build up. That's the classic straddle that I can get behind that strategy. It's impossible to find. You're not going to get a low vol build up right now. And 2, so much of earnings is likely to be priced into some level, whether it's good or bad, that you're not going to see the kind of dramatic move that you need to really profit. Will you see little gap up, little gap downs? Yeah, but like, no matter what the numbers are, they're not going to shock the market. If they're bad, people will be like, oh, we knew they were bad. So the kind of shock value that a miss, I mean, look at Wells Fargo. I mean, go to Wells Fargo today. They made 1 cent compared to $1.20 a year ago. 4%. 4% is not going to get you on a straddle over that volatility that you're paying.
You're paying extreme volatility right now.
And so, like,
in fact, I actually, instead of the straddle, Mark, I think a debit condor where you smooth out the volatility. If you're an advanced option trader, right? Something where you could debit condor it. I think there are other ways to play it.
Well,
The
Tim,
playbook.
Tim, let's talk about different ways to play it. Playbook for all these different strategies, because at Tackle Trading, we're not just, always just covering the market. The people who know from our website, we cover everything. We have a playbook that goes through, delta plays, your calls, your directional plays. We have, all these different videos, these teaching courses that run through how to play the market, the theta playbook, your Vega. So this would be your volatility. So these straddles, these things around earnings, we have courses that are showing all of these that you can download based off the playbook. Like, every single one of these can be played in a different way. There's never one answer. There's never just one tool.
Hey, so
we're not just a hammer looking for a nail.
Listen, I'm totally willing to use us. Come sign up for a free trial. Watch what you want. If you want to jet after that, if you're at home and have nothing to do for 2 weeks, there's a lot more valuable practical things in that playbook you can watch and learn than watching the 17 millionth episode of How I Met Your Mother.
That was a good show back in the day.
Hey, come on. That's a good show.
By the way, you guys might not know this, but I'm like OCD. If I miss a question in the chat, I'm going to lose it.
Yeah,
so I got to work through these.
You're going nuts over there.
Yeah,
I literally think it might be the worst environment in the history of trading for straddles and strangles right now. That's my opinion on that.
Whenever you have VIX spikes, it's not great.
It's not have to do with the VIX. It's about the expectations already being absorbed in.
Well, I mean, that's high volatility, isn't it?
No, but it transcends that. Anyways, bottom line, I hate them. I think
Tesla has the money. They should pay their rent. Take a look at Tesla here. I agree 100%, but market actually really liked it when they said we're not paying our rent. I wonder if renters out there in middle America who got a duplex and they've got a landlord could just call up the landlord and say, hey, listen, I used to pay $1,600 a month. Now we're going to pay $1,000 because the economy's changed. You think that would fly, Mark?
Maybe for a month, maybe for 2.
Maybe for a month or 2. We'll see. Let's see here. People probably drawing lines of their credit. Yeah, I think so as well. Let's see. I might miss. If I miss any, guys, just that's fine. We can do them tomorrow. What does government owning companies mean? Will the government tell them what to do?
It means
No,
communism.
it does. I mean, Mark,
No,
they're
ownership
taking a
of production
small.
is communism. But if they're just on the board owning portions, they wouldn't necessarily be able to tell them what to do unless they took whole control of the entire thing. It would be just like any other board member or like a hostile takeover where you have a billionaire that decides that he wants to buy through the market, through the open market, just start picking up shares until he gains a good percentage where he can
Mhm,
have a say on for what the company does. It'd
mhm.
be similar to that. If the government were to take equity, large amounts of equity in companies, they wouldn't have whole control. Now it would be bad because if someone didn't want to do what they want to do, they could adjust some laws, and that's where the problems start coming in. But that's what it would look like. They would basically be a large shareholder that would be able to advise the board as to what the company should do in as a business.
Mhm. Yeah, I agree. I mean, but they are taking small stakes. I wonder if they're even going to have board votes or anything like that. It might just be a part of the terms of the deal, Mark. It's like, well, the airlines didn't want to give up the ability to buy back stock forever, so they gave up 1% of their shares or something like that. Gave a government stake in to put some skin in the game. Who knows? I don't like it. I think that it's kind of a necessary evil based on these bailouts that we're going through. It's not good news, and definitely, Cody, not capitalistic in the strictest sense of the word, right? I mean, we definitely we're not envisioning this with the Adam Smith kind of free market capital back 200
Absolutely
years
not.
ago. Right?
Yeah.
Yep. All
Wealth
right,
of Nations, guys. Good book. Read it.
couple more I want to talk about. Amazon actually just announced yesterday that they're going to stop the kind of squeeze they had on
Amazon had an
shipping.
incredible run, all-time high breakthrough during this down market. This is incredible.
Yeah, and they're going to start shipping non-essentials. For a couple weeks during the pandemic, Mark, they were saying, "Hey, listen, we're going to only be shipping the necessary things in the short term, medical supplies, whatnot." They're opening back up for business. And you guys asked me on the podcast yesterday, Walmart or Amazon, and I picked Amazon. And look at this move here. Big tech is leading this market today, Mark.
Well,
Amazon.
you can't. Amazon is not tech. You can Amazon for me. It's not. Come on, let's get out of the way. They have a website. Everybody has a website these days. All right. To put them in a tech, Amazon is consumer staples. You want to think about this environment. Is Amazon a tech firm or is it a consumer staples company? Something that's needed, that's necessary, that's part of the fabric of society, that you just absolutely need to make a society run and function on a very basic human need level. How does Amazon not fit that description better than anything else?
I think they're both. I mean, their AWS services are a big, big portion of the revenue. The stuff they do for businesses on web storage and things
Yes,
like
that's why Amazon's skyrocketing the last 2 days because of those things.
That's not my point, but they do have a tech element to the company, don't you think?
Yeah, well, who does it? Or are we a tech company? Hey, we're operating on Zoom. We have a website. We put out nice, fancy videos. Come on. This whole tech argument is stupid.
Well, no, because they do actually develop out and they code in and
where do
build
they
out
make their
software,
money?
and they make most of their money through the fees they charge to use any of their services, and then even to, order from
Once
Amazon.
again, is it skyrocketing the last 2 days because of all of that nonsense you
No,
both just
it's
said?
skyrocketing.
It's not the product because they don't own half the things they sell.
No.
They'll actually sell you something and then buy it later.
Amazon
they're
is
perfect short sellers.
skyrocketing.
They will sell it to you and then go buy it cheaper and then ship it to you. Amazon is
a
they
consumer
don't own
staples
anything.
company. The reason it is skyrocketing because somehow everybody woke up and said, "Hey, it's shipping a lot of food. Amazon skyrocketing. They're hiring a ton of people." Who knows? Amazon, how should you play it, right?
Mhm.
But Amazon is likely going to do very, very, very well in this environment.
Mhm.
In their inevitable takeover of the world.
Mhm. Yeah, Swen, I've dug into some of that, but I think Mark is right in the short term. Obviously, they make a lot of money on their stuff on the back end with AWS with businesses, but the reason they're rallying, I will cede the point. People are buying them based on the perception they're going to lead the way in the new economy. Okay, that people are using Amazon, the reopening. We're still going to have a lot of consumers, Mark, that don't want to go to malls. I saw a question on Twitter yet today, and at Tim Justice Utah or at Tackle Trading, if you want to follow one of our Twitters. And the question was, if the mall was open today, would you go? And I would not. I can't imagine needing to go to the mall.
Very few people would.
There's a lot of things I would do, If you had some quarantined areas of a restaurant out on the patio and I knew I could have a nice meal, I might consider something like that. But going to a busy mall just to do retail shopping when I can do it online, obviously Amazon is benefiting from those narratives, and they're exploding. I mean, what is that percentage here today, Cody? 5.4%.
5.4%. That's a crazy move.
Really, really impressive. Take a look at Roku real quick. ROKU.
They had a nice jump, but they kind of
This
battled
stock
it
was
intraday.
beaten down. You know, why did Roku not benefit from the theme that Netflix did? You know, everybody's
But
watching
online
Netflix.
streaming and all that stuff. That's a good
Yeah.
question because I mean, you can stream anything using a Roku device.
Go look at Roku's price action the last 18 months. Roku's a wild chart. You know, and I've made this joke before. Listen, the coronavirus has existed in Roku's stock since its inception as a company. This stock is a wild child with huge swings. Like, you would not, I mean, look at the chart. When did the coronavirus start? You would never know, because this stock is crazy price action. It's why day traders and swing traders love this stock, because it can have, I mean, even before all of the volatility in the broad markets, Roku's always had volatility. But Roku's always been a crazy beast. So, like, and it's one of the reasons it's one of the favorite stocks amongst day traders and swing traders. They're like,
I got to tell you,
stocks.
I've loved this stock for a long time. It's fallen out of favor with me and the market for the last 6 months or so. It's going back on my watch list. You know, I read the news today. They reported, and I think Steven Johnson is right down there in Atlanta. He says that was a funny fall, and the leap was because they said streaming was up. Well, duh. Yeah, we know streaming is going to be up. Demand for the product is definitely going to be up. I love the company. I think it's very tradable.
Wow.
I mean, I probably can get massive. I mean, what? Go to the trade tab. Let me see those naked put price levels on Roku.
With 31 days out, let's see what we got here.
Like, I mean, I got all kinds of cheaper prices that I can get reasonable. You know,
dude, you could sell
even
$70,
like
$7
Oh yeah,
put,
you can go way out and get some nice.
pick up
premium.
$123, Mark.
yeah, you know, yeah, because once again, newsflash, streaming is up.
Absolutely,
Done.
it is. Other companies grabbing my attention here today. AMD, give me a chart on that one real quick. Just leadership out of some of the names that were high flyers for a long time. Just look at that thing. Inverted head and shoulders breakout. You know, that's a swing trading signal that triggered yesterday, Mark. I mean, I think we've been starting to talk about swing trading. I think you can start to nibble in, you know.
No, I said this last weekend to the pro members on the weekend shows that I think swing trading's back. I think things are technically cohesive again. I mean, we're seeing this with breakouts, and we're seeing this with certain bullish signals. And when they clear them, things are going crazy, right? Like, I think swing trading's back. Like, I really do.
I do as well. I think with, you know, obviously position sizing, all the rules you have to have as a trader built into there as well. And those are things I always say to remind people to be prudent.
I mean, that doesn't mean go do 20 bullish swing trades or 20 bearish swing trades.
I hate the word nibble, but nibble is appropriate here. Shopify, Cody, real quick. Guys, these are some of the leaders in the market today. I mean, look at Shopify just clearing all the MAs, Mark. I mean, you're talking about clear air now. Now, obviously, you got some old history. You got resistance pivots, things like that. But a lot of the big names, Amazon, Shopify, and AMD here, I'm watching on the top of the leaderboard. Guys, I mean, they're showing a lot of strength here the last week. This is not just the bear rally into the old 200. These stocks are showing me something, Mark. Do you think that theme can continue?
I think, like, once again, like in sell-offs, it's because once again, like, we're going to have a 2, 3, 4 day bear sell-off at some point, right? I think identifying market leaders today, identifying where the real sentiment is today, Amazon, AMD, Shopify, identifying these companies and prioritizing them on trading moving forward is going to be the bread and butter.
I agree.
So, like, when you get pullbacks, because one's coming, right? I don't care if you're uber bull, uber bear, you just know that a pullback's coming at some point.
Absolutely.
That who are market leaders today when those setups occur, they have to, and there could be some really quality trades. Like, I'm not going to go out and buy Shopify, but I'll trade Shopify if I get that pullback set up. I think this could be an outstanding trade. We have to understand where market sentiment really is. And, you know, Shopify, Amazon, AMD, like some of the old leaders, right?
The old leaders are playing ball here, guys. I mean, they are whooping butt in the market here today. And it's telling me a lot about price action. I'll give you one bear, and then we're going to play rapid fire here for about 5 minutes. If you don't know what rapid fire is and you're new to our show, it's pretty simple. You put a stock in the chart. We're going to go through as many of them as we can. We never get to all of them. We just give a quick response kind of idea on what we're seeing there. And we're going to look at your companies. Deer on the loser side here. And here's where we talked about it, Mark. Swing trading might be back here. Take a peek at that now. 2 days down off the pivot. I mean, another red candle here in a row. Even I think you have new entries even below that like 130 mark. If you can get below that little intraday pivot and the moving average, there's going to be winners. There are going to be losers in this market.
Hey,
and,
if IMF is right and there's $9 trillion sucked out of global GDP, you convince me why I should buy Cat or John Deere or any large scale equipment manufacturer. No, absolutely not. Give me bearish setups on these companies.
I can't. All right, guys, looks like we got some stocks coming in here. And by the way, one of my favorite things I'm seeing down here in the chat, I need my Team Tackle crew to represent for me. Some of our beginners that are here, I love you guys. Welcome to our show. We got 5 thumbs down there, Mark. You know, that's a good metric. We've never had 5 thumbs down. We only usually just have this glowing positivity and love. So I need my veterans.
Well, some people either want to hear all bull or all bear, or they just want to simply tell them what to buy. They don't actually want to know what's going on behind the market.
It's my favorite thing I've seen in a long time, Cody. I'm not taking that as a negative. That's a good thing. That means new people are watching us and all that kind of stuff.
I mean, we've talked about the market. We have one person wanting us to look at the SPY, and when we keep talking about the S&P, the SPY is what we're talking about.
Yeah.
So real quick, Tim, what's your thought on the SPY?
Same thing, bull trap. We're heading into some real concern here. This old pivot point back on 3.1, 3.2-ish is going to play its way in. You've also got falling moving averages. But that being said, bulls are in control in the short term. If these themes that we're watching can get above these zones, market would not surprise me for irrational price behavior for a month or two. But earnings season on deck, be paying attention to it. We'll break it down day by day on the SPY. But same thing on the S&P, same as the analysis on the S&P. DLR next here. I'm going to give this one to you, Cody.
DLR, let's see what we have here. Man, this thing is extremely volatile in recent days. Realty Trust, so your REITs and things. And that would make sense that you would see some volatility with everything that's going on in the market. Overall, I mean, it did have a breakout. So it's starting to consolidate a little bit, moving upward. So in rapid fire, we're looking at swing trades. We're not necessarily looking at long-term investing. With this one, because of how volatile it is, even with it breaking to the upside, I'm not sure where I'd look to target. I mean, maybe 160, but I think there's better plays out there for a bullish swing trade.
Pinterest next. Mark, you're going to get this one. Online marketing, shopping, social media kind of mix. I mean, from a technical perspective, you've got an ugly chart here developing old support, new resistance. But what you read on over on the right, you clicked on the live news button. You see over those little.
Oh, I see. I was like, what the?
Misclick, fat finger that one. But Mark, what you read on Pinterest?
I hate this general technical pattern where you had consolidation for about 8-9 days and then you broke out and you're pushing towards or near this relative pattern that's occurred over the last 3 weeks. I hate it. It's a market mirroring pattern. It indicates that it's no stronger, weaker than the market itself. So I hate the general pattern as a whole.
Eli Lilly. This has been a Tackle 25 favorite for a very, very long time in many ways. That is a high base breakout on what is just a lot of momentum here heading into earnings here in about a couple of weeks. So
we do have earnings, next week?
But beautiful break. I mean, this has been a fundamentally sound company for a long time. They make the kind of stuff that we use even in a recession. Very interesting chart there. Definitely a bull. Definitely a bull. Switch. SWCH here. Cody, you're next.
Big move to the upside. This thing has quite the move. Broken through a resistance level today. I think that the trade on this one would probably have been the break around here. I think it's a little overstretched. I mean, the next target, if you're in it already, could be up to those highs. If you're not in this, I would look for some sort of consolidation or pullback before looking to reload. If we can get a doji and then a step back into these moving averages, or even just a base above this support level at 16, new break up to 18, nice, easy, clean trigger.
Interesting chart there as well. American Express here. Dow component finance is down today. You've got concerns about what's going on with JP Morgan. Obviously, it's going to follow suit here, Mark. Read on the credit cards. I mean, we got bank earnings today. Do you think that's going to filter into credit cards?
Well, and surprisingly, like once again, if you're a credit card company that takes consumer debt, it has consumer credit risk. Today's bank report did not paint a pretty picture for companies like Discover, American Express, right? Like a Visa, a payment processing factor, much more akin to that don't take directly that consumer debt. Those bank earnings painted a really nasty potential credit risk factor. So while once again, this is a company that 2022, 2023, whenever it's a great company, we'll get back to business when the economy is going strong. That consumer risk thing is a real thing. And it would make me put this on akin to like the,
It's
I
a
would
whole
be looking,
list for me.
I would be looking at bearish trading setups on it over bullish trading setups on it.
I mean, AXP, I don't know. If I was going to play credit cards, I'd probably, if I was wanting to play credit cards down, I don't know if AXP would be the one.
Well, what would be the one then?
It might be like a Master or even a Visa.
No, why? There's not the consumer risk element though.
I mean, AXP though, they've just been so fundamentally sound for a long time. Doesn't Visa carry that same risk?
Nope.
Different risk. Interesting.
Different risk.
So just different portfolio holdings based on that?
Well, no, I mean, it's just like it's consumer defaults. Like if the economy struggles, a lot of people aren't going to be paying their bills. And unlike Tesla, they're not going to be able to get away with it. You know, and so like that, you know, that consumer credit risk is real. Come on.
Dude, I appreciate it.
Come on. Like it's a no brainer. It's like streaming is up. A lot of people aren't going to pay their credit cards if you have 10+% unemployment. Sure. That's just the reality of it. And
people are going to take care of things like groceries before they pay a credit card company.
No, come on.
Just put it on hold. Yeah, I get it. That makes sense. Thanks for clarifying that. I appreciate it. Google here next. Jeremy Johnson. Always great to see your name there. Halftime crew. Google's benefiting. Google well. Big move in tech. Falling moving averages. Some concern in here. But man, it wouldn't surprise me if tech continues to lead to see Google popping back up above some of those MAs at some point. Keep an eye on it, no doubt about it. Got to love the move here today. What is it, 4.5%? UNH here. We're going to go about 3 or 4 at a time. I'm going to give you guys, I'll take 3 or 4, try to get through a bunch of these. Health insurance heading right into earnings this week. We'll have to wait and see. There's no way.
Tomorrow, yeah. If you want to do an earnings play on this, I mean, you could. What's the market maker move on this? $8. So, that's, I mean, $8, we're talking here and here. That's too far. So not, I don't know.
That seems underpriced on the risk, by the way.
It could be. So
inverted fly might be in play.
Yeah, I was going to say an inverted fly, I think would be a good play on this during earnings. But as far as a swing trade, I'd wait till after earnings.
Yeah, I'm with you.
Inverting flies, and if you don't know how to play an inverted fly, Gino has a lot of material on it. Once again, a great reason. Like, yeah, if you want to play earnings, yeah, 1,000 out of 1,000 times in this environment, that over a straddle would be a way to potentially play.
I'm with you. And just a couple minutes left here. We're not going to get to every one of them. I'm going to kind of handpick and just fly through some. Pizza, been a very, very good performer here recently. Obviously, Domino's as well has been running.
I mean, it makes sense. People are ordering pizza, not eating at home.
That's an inverted head and shoulders breakout that just developed last week. We're now approaching probably T1 if you took that trade. That's target 1 if you don't know the lingo there. You need a new breakout up above 70 if you're looking for new entries. Space, SPCE, one of those market darlings in the fall when it was just blasting out.
Oh, wow. It's up today.
Ooh, baby. I mean, if Mark, the momentum players are coming back. I mean, what have we learned here today? And they are. I mean, Amazon, Shopify, Roku. Look at these momentum players. That is a beautiful candle. Now, that's not a great entry point.
27% move on the day.
Man, this is telling me the appetite for the bulls is actually
That
probably
to
more
me, that's the
resolute.
day trader's dream. I don't think that was a swing trader's dream. If you day traded this, then you've already probably taken your profit and you're done.
Mhm.
I
And
wonder if there was even good opportunities to get in and out of this thing, or if it just went straight up. Yeah, it went. I mean, one secondary entry probably here, but that
beautiful
kind of
momentum.
move. Oh, great
Mark,
momentum.
Mark, I'm giving you 4 right now. Let's take a look back on the daily chart. Let's do work. Slack. It's a dirty, sexy money candidate from one of our watch lists. One we really like. Mark, what you read?
You know, I'm not opposed because once again, it can benefit, you know, choppy trading environment. So this does not look like a great day trading, swing trading candidate yet. Maybe one down the road. Don't mind Slack at lower levels for naked put on
It's got
Slack.
this cute little 200 that just started.
Yeah, that's nice. But look at
Hey,
just the price action. It's
I
choppy.
know, but from its IPO date to now, it's finally got a 200.
finally there. Apple
Oh, I
Computer,
see what you're
Mark.
saying. That's cute, actually.
AAPL.
Now, one of the most disconnected stocks from reality, in my opinion. You literally are betting on a future in a world where they will sell less iPhones, that they might have supply chain disruptions, even if demand were there.
Mhm.
Like Apple is a disconnect from reality stock for me right now. Is Apple a great company? Sure, but once again, like the Fed can't make people buy iPhones, so trade anything, right? But as far as me buying, no, there's not a chance.
Not for you. JD, Chinese tech stock here. I'll take this one. You're up at resistance.
No, I
And
talked about JD this weekend.
did you?
I did put it on a bullish, like JD uh, was one of the plays that, you know, if you're looking for a company that can be stable in this environment, JD.com definitely fits the bill. You actually have upside potential. If you want, so it's a matter of how you want to play it. You want to come in. It's at resistance. Never a great idea to buy at resistance, right?
Mhm.
But you know, this is one of those companies that if you're looking for that bullish angle that can take advantage of bullish price movement in a company, Johnson and Johnson style, Amazon style, that no matter what the future holds, you could see scenarios where they do very well. JD fits the bill for me.
I like it. And we're pushing the back in the show. We've had a great one here today. I've enjoyed it. If you're watching our show still, appreciate you guys. And we do have this every day, 12:30 Eastern. Click subscribe, click the bell, come back and join us every day. And if you're looking for what we do over on our website, www.tackletrading.com, and you can get a 15-day trial. A lot of fun here today, boys. Final thoughts, Cody. I mean, there's a lot going on out there. Obviously, you are a new father. You're focused on
Yeah, I'm
just the
very happy about
positivity
that.
in your life, right?
Absolutely. I mean, he's been my little trading buddy here. I got a day bed beside my desk, and he's just laying on it right now. Every day he's been my little trading buddy. When I wake up and I'll day trade the market open, and he's just there with me, just chilling.
Mhm. And Andy Gow, welcome to our channel. The SPY we kind of broke down earlier in the show, but still short-term bulls in charge, no question about it. Long-term, we still have concerns about the economics. Dan, Activision, we're talking gaming.
Mark, he just can't. He can't let it go.
MOCD.
No, Activision. I talked about it this weekend for the last couple weekends with our pro members on Activision. Once again, preferred play as far as if you're looking for those bullish plays that can do well in this environment, Activision fits, right? Data is really important. We got data on
Mhm.
Johnson and Johnson. We got data on banks. Maybe not as enthusiastic about banks today. Activision, we have data on streaming. Streaming's off the chart. Like gamers are off the chart by like, you know, what is it? What's the big download site for gamers?
Oh, you mean like Twitch?
Not just
Or-
Twitch. Twitch numbers are up as well.
Yeah.
Steam's one.
Steam. Yeah, Steam numbers up. Like, I mean, so we have data on gaming that, you know, gives us like, yeah, there's a lot of usage. Activision absolutely fits the bill of a company that if you're looking for that cash flow candidate, if you're looking for that stable, can do well no matter what the future holds candidate, Activision definitely fits the bill there.
By the way, the S&P just broke into a new intraday high here in the last 10 minutes.
Let me reshare then.
No, we're good, bro. Let's wrap.
All right. Well,
You can peek at it if you want. I got no problem with that. We did just break the intraday high. Day traders are loving this environment right now. They just are.
Well, Toss doesn't want to let me show you guys
Toss
at the
doesn't
end.
want to
So.
comply.
Oh, there it is. Oh, that is an intraday break. Oh, not only that, it was a break and then a pullback to the break point.
Break, retest, then break and run.
Oh yeah, I love that pattern because it just gives you secondary confirmation that it wants to go.
It is, and if just last thought, I mean, these are the type of things we teach at Tackle Trading. I know that's your favorite pattern. I know that's a lot of people's favorite pattern. Just explain in 30 seconds, Cody, what you're talking about. It breaks and then it comes down and retest. What are you talking about there for someone that might not know?
The breakout retest. So when you're looking at that resistance level and it's starting to push, and it hit it, didn't quite get to it, pushed up against it, finally broke out. So if you're just a straight breakout player, you would buy right as it breaks out. Now, if you miss that and you're still unsure if it's going to be an actual breakout or maybe a false breakout, you get this retest. When you get this little retest here, it gives you a secondary opportunity to get in on this trade. So when that breakout test happens, it gives some security that this breakout is a true breakout and going to continue. It's actually my personal favorite pattern, breakout retest and breakdown retests, because even let's say you took the break, you now get an opportunity to add your position. So you can be more confident in that trade after you took the break, gets a little retracement, and then continues. You can now add more. Fantastic. And then, of course, the support level
I know
and the stop is right there. So it's quick, easy, low risk trade, because if you bought just above the breakout and now you have a pivot level, you can put the stop. Low risk trade, high reward when they happen. I love them.
No, and you're not alone. A lot of traders that Tackle Trading love that breakout and retest to get in. Low risk, high reward. The numbers all make sense. That's the thing. Whatever happens in the world in the coming 12, 18 months, there's going to be great day trading opportunities. There's going to start to be great swing trading opportunities. You can say, I don't care. I don't want to worry about what's going to happen. I just want to trade. That environment's going to be there for you.
Yeah.
That's just a guarantee.
Love it. All right, guys, we got more premium content tonight on our website, Coach's Show, 8:30 p.m. Eastern.
Who's on the Coach's Show tonight?
Tyler Craig, and a guest to be determined in our meeting in 5 minutes when I ask who could do it. So
anybody who's seen Tyler knows that he is a options expert.
Yep. All right, we're out. Great job today, guys. We'll see you tomorrow, same time.